You've probably heard it a million times. To win at investing, you've got to be a genius with some super complex strategy. But what if I told you the real secret to building wealth has almost nothing to do with how smart you are? What if it all comes down to one simple trait most people completely overlook?
I mean, really think about it. When you picture a successful investor, do you imagine some brilliant mind that can see the future? It's a really common assumption, but is it actually true? Let's dig in and figure out if investing is really a game for geniuses.
All right, this brings us to what might be the single biggest myth in all of finance, that the smartest people automatically make the most money. It sounds right, doesn't it? It feels fair. But the truth is, it's just not how it works. And the reality is actually way more interesting.
Okay, so here's the one idea that could totally change how you think about all of this. Success in the market isn't about what you know, it's about how you act. It's not a test of your IQ, it's a test of your temperament, your character.
And to really get why this is so important, we have to look at a pretty famous cautionary tale. This is what happens when unbelievable brainpower meets pure, unfiltered arrogance.
So picture this. It's the 1990s, and there's a hedge fund called Long-Term Capital Management, or LTCM. These guys were, and I'm not kidding, the absolute talk of Wall Street. They were like the financial world's dream team, the Avengers of investing.
I mean, their team roster was just ridiculous. It was a who's who of financial intellect. We're talking Nobel Prize winners, legendary professors, literally the smartest guys in the room. On paper, they were completely unstoppable.
And for a while, wow, their results were just breathtaking. Between 94 and 97, they were pulling in annual returns of over 40%. It seriously looked like they had cracked the code, like they'd found the holy grail of making money.
But, and there's always a but, right? Their incredible intelligence had a shadow, a fatal flaw: hubris. They got so confident that they borrowed insane amounts of money, absolutely convinced that they were just too smart to possibly fail. It was this dangerous illusion of control.
And then 1998 happened. Their whole world just came crashing down. An unexpected crisis halfway around the world made their perfect models completely fall apart. The fund imploded so spectacularly that it almost took the entire global financial system down with it.
You know, this whole disaster just perfectly highlights a simple, timeless piece of wisdom from Warren Buffett. It is crazy to borrow money on securities. One should invest within one's means. It's such a basic rule of behavior, a rule that the geniuses at LTCM thought they were above.
So we've just seen how being brilliant can lead to total ruin. Now, let's completely flip the script and look at a story that shows the incredible power of the exact opposite approach. Let's talk about the janitor who quietly became a millionaire.
I mean, just look at this slide. The contrast here tells you everything you need to know. On one side, you have Richard Fuscone, Harvard MBA, big shot finance exec, who went bankrupt. And on the other, Ronald Read, a janitor and gas station attendant who left behind an $8 million fortune.
So what was Ronald Read's secret weapon? His incredibly complex strategy? No, it was just unbelievably simple. He saved what he could, he bought stocks in good, solid companies, and then he did the hardest part of all. He just waited.
That's it. He wasn't trying to get rich quick. He wasn't trying to time the market. He just let the quiet magic of compounding do its thing over decades and decades, turning his small, regular savings into a legit fortune.
And that right there, that brings us to the real secret sauce of building wealth. It has nothing to do with timing the market perfectly. It's all about giving your money time in the market. That's the raw power of compounding.
You know, let's go back to Warren Buffett. We all know he's a brilliant investor, right? But as the author Morgan Housel so perfectly put it, his skill is investing, but his secret is time. Now get ready for a stat that's going to blow your mind. The vast, vast majority of Warren Buffett's wealth, we're talking $81.5 billion, was earned after his 65th birthday. His story isn't just about being a smart investor, it's a masterclass in the power of patience and just sticking around. And this chart really tells the whole story. You can see over 150 years of growth. And yeah, you see all those little wiggles and dips. Those are wars, recessions, pandemics, you name it. But the long-term trend is crystal clear. Up and to the right. That is the powerful tailwind that patient investors get to ride. So, here's the bottom line. The real key to getting wealthy isn't about hitting a bunch of home runs. It's simply about staying in the game. The ability to just endure, to ride out the crazy cycles without getting scared and selling everything.
That is the most underrated skill in all of investing.
Okay, so let's put all these pieces together. Let's redefine what it actually means to be a smart investor, because it's not what most people think.
So what does this patient approach actually look like day to day? Well, it means having the discipline to stay put when the market is going nowhere. It means having the courage to keep investing even when prices are falling. And it means having the wisdom to just stick to your long-term plan.
And here's a surprising little truth bomb for you. Good investing should feel boring. Seriously, if what you're doing feels exciting and thrilling, you're probably not investing, you're gambling. A well-built portfolio should feel like watching paint dry, and that's a good thing.
So in the end, the market doesn't really care about your complex spreadsheets or your genius-level IQ. What it rewards is character. It rewards the humility to admit you can't predict the future, the discipline to stick to a plan anyway, and the patience to just let time do the heavy lifting for you.
So, as we wrap this up, I want to leave you with a question to really think about. Are you trying to outsmart the market, playing an intelligence game you probably can't win? Or are you focused on mastering yourself, playing the long, patient behavior game, the one that actually works? The choice, as always, is yours.